Hey everybody, this is Jose Blasco here. We are about to get started. As always, sound check. Everybody, please go ahead and confirm with a quick message on the chat box that you hear me well. A quick hello would do. As always, it's kind to the group, and at the same time, now I know you hear me, so we are ready to get started. So please go ahead and do that. We are starting in 20 seconds, everybody. Thank you very much, my friends. Thank you very much, Maka, Christian, Siderman, everybody. Very good to see you guys. I'm just putting myself here in the bottom right side of the screen as always. This is my place. We are live. Hello, everyone. April 21st, 2021. Lots of 21s today. My name is Jose Blasco. I will be guiding the session today. Today it's options with options. So we're going to be looking at the beauty of options trading. I always say options give you options, okay? And I think that these sessions definitely show that. So we're going to be diving into it, and again, talking about new trades, talking about prior trades, talking about the markets, little bit of everything as we always do. Before we start, highlighting the disclaimer on the upper left side of the screen. Please go ahead and read it carefully. It is important information. I am counting on you to read it fully. Please do not skip any word. It's all important. So please read it carefully. Thank you so much. And a little bit when it comes to getting organized, we just said hello. I want to remind you all that we are simulcasting. So be aware of those video lags depending on where are you watching from. You may be watching us from YouTube, from Facebook. You may be watching us inside of our private trading room in tradewithufos.com/live, which is our website. Again, different places will have different video lags. Okay, so be on top of those chat boxes to answer questions in a timely manner. Okay, I'll do the same. And also, the other thing about simulcasting is that obviously some of the sessions are done in public spaces such as YouTube. Other sessions are done in private spaces. Actually, it's only one space, private space, I should say, which is our website, tradewithufos.com/live. And to access that private space, you need to be registered as a coaching member. So you can find more information about that on our website if you are interested. The difference of the sessions that we do in open versus the sessions that we do in private, really, it's the duration. That's the only difference, because trading is trading. So the only thing is that we keep them shorter on the public spaces. Okay, so today we'll cut the stream around 30 minutes on YouTube, Facebook, and so on. While in the live trading room, we do the stream for the full hour. Okay, so again, we are attempting to adapt to our audience, which some of you have said that you are part-time traders, and attending a 30-minute session is more than enough for you. Some of you are like me, never got enough, love it, love it, love it, and always want more. In this sense, it may make sense to you to be registered as a coaching member of our community. Okay, so anyway, with all of this said, we are going to look at the market, we're going to review the trades that we have, and then we're going to get into new trades. We have a lot of things to discuss today, like most of the Wednesdays, right? Because we are coming from, the last session was Thursday, right? So we're coming from, throughout the weekend and everything else. And therefore, there are multiple things to discuss, okay? So let's begin. Here is the beautiful TradeStation. We're going to start loading the chart of the S&P, and we're going to get to see what's going on, okay? What's going on the S&P, because definitely many things have been happening, okay? So, well, take a look, okay? The climate, 17 out of 9, okay? This is a very, very extended market. Notice how the vertical line on top of the dot, went very, very short for 2 days in a row. This is kind of like the sign of a climate which is about to switch from confirm to non-confirm, or switch from blue to red. That would be healthy for a continuated move. Okay, if the market was to move down for 2-3 red dots and then go back up, then that would probably imply that then we're going to have another continuation of the move, maybe another 17 candles going up, right? The problem is that we had very little pause. Actually, the color never changed. We are still in an up climate. And look at that, new UFO showing up in the picture. That's powerful stuff. Okay, that certainly implies or suggests the market is gonna totally break what statistics suggest and just keep going. Again, it takes absolutely nothing for those orders to be canceled and the market to crash. Okay, so again, the fact that the orders are there, it's important. Those green UFOs are really important. But the fact that we are reaching 17 out of 9 on the climate, we cannot underestimate that. We are dealing with a market condition which is, not sustainable from a statistical point of view, while it could continue a few more weeks like that. Okay, we've seen that before, but it is really unlikely. Okay, so this is the market condition that we have. When we look at the VIX, I will bring in the VIX right now. So when we look at the VIX, so we saw when the market was falling, we went, from those very low points of VIX 16, 17, we went all the way to around 19. So, people got scared, everybody started buying puts, okay? And now, we got those green UFOs show up on the VIX, okay? So nice to see that we have a little bit more premium available out there. At the same time, it's just a little bit more premium, okay? Instead of 16, 17, we are talking about, let's call it 18. So it's not like it's a major difference, okay? It's not like it's a major difference. If I zoom out, okay, and you were to look at, those levels, 30 something, that's way more significant. Notice if I zoom out, the chart, the scale of the chart gives you a much realistic picture of, the change of volatility from last week to this week, which is really not that much, okay? In any case, we will welcome that later when we are looking for credit opportunities, because, if the volatility goes up, so that's a good thing, okay, for those trades. Anyway, so that's what's happening out there with the current market condition. And what I would like to do with you guys is I would like to go over the trades that we have, which out of 3 symbols you can see I have on my screen right here. To be honest, only one of those trades is still alive. The other trades were canceled, okay? Were not canceled really, but they are over, okay? So anyway, so let's begin with a funny Facebook trade, okay? And you will understand what I mean funny. Funny because in the end, if you have held this trade and did nothing about it, it ended up expiring on Friday 16 exactly at 3:05. So this trade would have paid the maximum or close to the maximum, which is, as we said very clearly before, it's a matter of luck, but definitely impressive to see that in the end, this is exactly where Facebook was when those options expired. Now, the last instruction I gave you in the last session that we were together on Thursday was that if Facebook was to reach the black line above, get out, okay? And this is what I did, okay? This is what I did. And when doing so, this Facebook trade ended up, I believe in my case, it was about 20 or something like that, 17, something like that, dollars of loss, okay? Overall, after the rolls and all the measures, okay? So it's a shame, really, because, I ended up with $17 of loss. If I had just done nothing, I would have made, $300 of profit. So it's a shame, but at the same time, we were dealing with a situation where probabilities were totally, random for us at this moment in time. Anything could happen. We didn't have any edge at all, and therefore, the rule I stated because of the UFOs and the lower time frames was to use 310.06 as an exit, which is what I did. And to be honest, I do feel very happy about the ending story of this trade, knowing that I was completely wrong, and the original risk of the trade was about $500. I ended up losing, let's say, 20. Okay, so happy ending for this trade, even though it could have been $300 or about $300 if you stayed in it. So feel free to type on the chat box, guys, if you guys exited sooner or stayed until the end, or what is it that you did. Feel free to type it on the chat box. I don't have much more to comment, really. This trade, to be honest, it was very rich on actions and corrections and damage control and conversions. So hopefully it was a trade that helped you open your eyes on many things that we are doing with options that, I never showed you before here in the sessions. Okay, so hopefully that was good. The next trade I want to comment on is AFL. Okay, and again, now you will see how it was a very good idea to have the rule I had the other day. So the other day, what we said is that if AFL was to reach the black line, get out. Okay, and I did. And when I did, this trade ended up for a profit of, let's say $10. So it was like a break-even trade, because $10 when then you add commissions, So it's break even. Let's call it break even. Maybe it's a little bit of a loss, a little bit of profit, whatever. Let's call it break even. So now, why is it a good thing? Well, because from there it just continued. Okay, it's not like Facebook that then immediately came back, then it continued. And in this case, here you can be very easily impacted by human emotions when you see it going against you, and then you see it come back, and you be like, "Oh, I should not have exited." But look at what's happening now. Not only is going back up again, but on top of that, a UFO is forming, meaning that if it's gonna go back down, it's likely going to react to the UFO and keep going. And again, this trade was not profitable above 50 to 90. Okay, so staying above and suffering time decay while we didn't have the advantage of increase in implied volatility, that would be very detrimental for this trade. And the instruction was to get out. Okay, so notice that if I show you the account, the only trade I got running here is COP. Okay, COP is the only trade I got running, which, by the way, is showing an interesting profit that we need to analyze. Okay, so I'm going to look into this next trade right now. Okay, you guys, everybody is a bit silent. Christian, you got out at -12, understood. Thanks for sharing that. Yeah, again, depending on how much you shave on the entry, the commissions of the broker, how much you shave on the exit, all of those things. So it could be +5, -12. It's about there. It could be even maybe someone may have got like +30 maybe. Okay, but again, to kind of simplify, it was a break-even trade. Okay, Maka, for some reason you still have the AFL trade running. Okay, well, this is a trade that you should be out of it. Okay, you should be out of it. We talked about it on the last Thursday. Maybe it's going to be a good idea for you, Maka, to go back and review the Thursday session. Okay, but if you recall, we were in the session here and price had moved down. Okay, and I believe we had UFOs in a lower time frame at this price level at 50 to 90. So I said that if during that session the price comes back and surpasses those UFOs, which is the black line, get out. Okay, and that's what I did. Okay, so maybe you want to go back and review. Yeah, you are out of AFL. You made $3. Very good. Yeah, again, break even, guys. Okay, break even. Nothing to be proud of from a result point of view, but many things to be proud of from a process point of view, because I want to remind you, in case you have forgotten, that the expectation for this trade was implied volatility to rise. Okay, because we are approaching earnings, blah blah blah, so implied volatility was supposed to rise. But then when you see what really happened to implied volatility, not only it did not rise, actually it went down. So the main driver of profitability of this trade worked against us, and because of the tweaks that we did during the life of the trade, we ended up breaking even. So that is something to be proud of, because one of the keys for success in trading is risk management, and indeed we manage risk very well here, isn't it? So good job if you did. Okay, so I'm just gonna delete AFL here and continue with COP, which this one will give us the opportunity to chat more about it. Okay, so anyway, I'm going to go back to the 55 in the time frame, so you have the view that you're used to. Good. Maka, should I close in now the AFL? Well, it's difficult to say for me now, in the sense that I don't have it on my screen any longer. Well, wait a minute. Maybe I can still have it on the Option Station Pro. Hopefully I did not erase it. And we can assess what's going on. But initially, when in doubt, get out. So if you realize that you should be out and you're not, so a very good action to also kind of build up your discipline and price yourself for a job well done, it's just to get out. Okay, at the same time, I want to take a look to see if maybe something on the screen tells me that you could maybe maximize a little bit the result of this trade before you get out. Let me see what we have here. Yes. So, okay, I know what I did. So this was my result. Okay. So in the end, the net purchasing for this trade was 34. The selling, I sold it for 42. So in my case, I made $8. Okay, I don't remember what I said before, but $8 was my result on this trade. Now, if I uncheck the bottom one, which is the closing order, right now this trade is supposed to be paying you 8.5. And so again, yes, the easy answer is yes, Maca, because if it keeps going, you're gonna end up losing money. Notice, by the way, how volatility went up here a little bit, because the last time that we were talking about it, you would be below the zero line, above 52.90, and now above 52.90, okay, 52.92 in this case, you are actually making $11, okay. So volatility went up. So what we were expecting to happen started to happen, but at the same time, we had this conversation on Thursday, which I'm not going to repeat, just to use our time wisely, and all the reasons are still in place for you to get out. So you are collecting a little bit of what we expected to start happening sooner, which is the implied volatility rising. So a good one there. And while you didn't exit last week, Maca, today you can actually exit for more or less the same P&L I had myself, which was $8 of profit. Okay, so go ahead and do that. Remember, you don't need to rush on the way out. Just try to shave the spread the most you can, and try to get the best price you can. Okay, cool. Okay, so now COP. So COP was an intense trade. This is a double calendar that we put together. It was the first time we were executing a double calendar in the room. I gave you actually, I did a comparison of a diagonal with a double, let me rephrase that, not a diagonal, a horizontal spread with a double horizontal spread, also known as double calendar, and the double diagonal. Okay, so we did 3 examples of what the trade could be, and we ended up selecting the double calendar as the choice. Okay, now what happened in this trade? Well, we were expecting that stock to be ranging between UFOs, and next thing you know, yesterday it fell like almost 5% down, and today actually it's going back up big time. I mean, if I show you yesterday, if we go back one day in time for 20, okay, so notice that price just fell like a rock just to hit that green UFO, and that green UFO, thank you very much, Mr. UFO, it's bringing that stock back up. Okay, those orders are now filled. That UFO is gone, but a new UFO is forming, meaning that a pile of new unfilled orders are being detected in the market that they have been added. So that's good to help the price of the stock to go back to where it's supposed to be. Now, what happens with most of the non-directional trades when a stock moves away from the middle point? Well, when that happens, typically you get to see your P&L to be underwater. In this case, if we look at COP, what is it that we see? We see the P&L. Okay, let me make sure I'm looking at the right thing here. Okay, here we go. Yeah, the custom. I selected the custom. Okay, we got 50 and 56. Okay, so this is our double calendar. Okay, right here. So what is it that, or what is it that we have? Well, we have a P&L currently of about $102.5. This is the added P&L. If I look at COP on Thinkorswim, it shows 77. But you may remember that last week we actually did one of those tweaks, one of those rolls, isn't it? So we collected some profit with one of the units. That was the call, and today, we can see that now we are again in another very nice position with a great profitability. Okay, so how come the probability went to the roof? Actually, notice that we are at the current level. We are very close to where the blue line is, isn't it? It's kind of like profitability is almost like what it would be on expiration date, but expiration date is still far from now, right? Because the expiration date, it's I mean, the latest of all is May 7th. The blue line does not represent May 7. Actually, it represents April 23. Okay, so what's going on? Okay, why is that? Okay, and here the answer is because implied volatility in this case rised. Okay, the one thing that we were waiting to happen on the trades that we had in the prior few weeks that did not happen because the market just keep going up, people getting calmer and calmer and calmer, and implied volatility did not move. in this particular case with this trade, let's go to implied volatility to see it visually. Okay, but we can see there that little uptick. Okay, you may think it's a little one. Okay, but when you look at the value, which is 38, and you compare the value that we had when we started the trade, that day was 35. So from 35 to 38, it's a 3% increase in implied volatility. Okay, 3% increase. It's not like it's a lot, but again, if I go back to the simulator, so you understand the impact, okay, and I add 3% of implied volatility, look at the $103 of profit, 99 now. If I add 3%, notice what's going to happen. It just became 115. Okay, so it's like a 15% increase of profitability just because volatility went up 3% in this case. Okay, so it's powerful stuff. Okay, it's powerful stuff, and this is one of the key drivers of profitability for the trades that are positively exposed to Vega, which you can see we got positive Vega all the time here. Okay, so let's see what else can we do. Okay, what else can we do? Because one action that you could start thinking, and this is for the most conservative, is when you see a gray line to approach the blue line, meaning that the current PNL to be very close to what the maximum PNL would be. Also because we are close to the peak, isn't it? So when you see something like that, okay, something not crazy at all to think about, would be to close the trade. Now, of course, if you were to close the trade now, which could make sense, we're gonna go through the rationale together. If you were to close the trade now, basically you are kind of giving up on the maximum increase, if you wish, of implied volatility into earnings. But at the same time, if you collected enough profits already, and of course the price of that stock moved far away from the middle part of the range, let's say it keeps going down. So if that stock goes below 47.5 more or less, okay, so now you're gonna be below the zero line, and below the zero line, what happens? You lose, right? So again, we need to evaluate all of it to understand from a trade management point of view what is the smart action to be done. So the first thing I want to do is to look at my Greeks, okay, and find out if the Greeks are still valid, or we are now getting into the distorted Greek territory. And then we may want to consider doing a roll and evaluate what happened if you do a roll and things like that. So I'm just gonna look at options. Of course, if we're gonna do a roll, we're gonna be working on April 30 and April 23. Okay. The options that we are utilizing on this trade are the 56 call. I'll start with a 50 put. Okay. So we are looking at the 50 put. Okay. On April 23. So the 50 put on April 23, it's right here. This option has an intrinsic value of 49, and this option has a theta of 13. So 2.5 days of theta at 13 is less than 47. In other words, we are not dealing with distorted Greeks yet on the put side. So in this sense, nothing to be done. We're just going to leave it alone. Okay, we're just going to leave this option there, and tomorrow we are meeting again, so we will reassess if that's the case or not. Of course, if that stock was to move up, the one thing that would happen is that the current 56 delta, meaning that option is in the money, the current 56 delta will be less than 50, and then I'm telling you that extrinsic value and that theta value will start very, very quickly looking distorted, and then we will go ahead and do a roll. Okay, that would be very powerful, because if you were to do a roll with the next expiration date, we would be able to collect so much more premium. Okay, 127. Okay, so certainly happy to consider doing that, but not yet, because we don't have distorted Greeks yet. Okay, so we are just going to expose ourselves to the beauty of being where we are. Okay, and again, the fact that the gray line is below the blue line means that we got positive theta, and tomorrow the gray line will be nearer to the blue line So we are going to make more money on theta tomorrow. Ideally, the stock will go up. So then we're going to be also closer to that peak. That would be perfect. But now I may be asking a bit too much. Okay, the stock will do whatever it chooses to do. I wish I could control that with my wishes. Okay. Again, just commenting on what the risk profile represents. So from the put side, nothing to be done. Okay. I want to discuss the call side, but first I want to check Ahmed question. Jose, I did a single calendar. Is it different than a double? The one you show? Yeah, it's totally different. I have it below, so I will look at the calendar in a minute, but it's gonna be quite different. Okay, my friend, it's gonna be quite different. And the problem I'm gonna have with this trade, Ahmed, to be fully transparent with you here, and so you understand, okay, is that this trade is already complex enough with 3 expiration dates in it to manage to explain, so for you guys to learn. So if every time I go to ConocoPhillips, I need to talk about the double diagonal, and also I need to talk about your calendar, it's going to be quite complicated. Okay, so I'm going to try to help you by looking at the calendar. Okay, but I will suggest that the moment you can close the calendar, again, don't do it now because I'm going to look at it first. But the moment you can close the calendar, I would suggest that you close it. So then in the following trades that I execute, you follow me the same way I do. So then you can learn from my actions. Because if not, the whole 1 hour would be spent on one stock. Okay, so I'm just trying to find a little bit of a balance there. I hope you understand where I'm coming from. Okay. Anyway, so what about the call side? Well, with the call side, we did a tweak. We did a roll. We took the 56 call that had initially expiration date of 23 of April, and we move it to the 30th of April. That's what we currently have in the account. Okay, so I want to go ahead and take a look at 30 of April and the next expiration date, which is May 7. Okay, I want to look at both. Okay, and again, because May 7 is the expiration date where everything ends, to be honest, I won't be able to do anything, because if I was to roll the 56 call from April 30 to May 7, another way to say that is that if you already own long the 56 call that expires in May 7, and now I'm going to sell short the same 56 call that expires in May 7, well, basically what I'm saying is that I'm closing the long call I own. In other words, I will be giving up on the calls. Okay, and obviously that would totally change the risk profile of this trade in a major way. It will not be the type of risk profile we are looking for any longer. Okay. Now, having said that, if I look at the 56 call, I need to load a bit more strikes. Okay. If I look at the 56 call, so what are we seeing on this 56 call? Well, the midpoint is 5 cents. The midpoint is 5 cents. The extrinsic value is 5 cents. The theta is 2 cents. Okay, 2 cents, and we got 9 days to time decay. Well, 9 days at a rate of 2 cents a day, that's 18 cents, but the extrinsic value is 5. In other words, Greeks are distorted. There are only 5 cents left into this particular option. And really, staying with it implies having the risk of having it to make another 5 cents as a maximum. In other words, it's kind of a waste of time to keep it. Is that making sense? It's kind of a waste of time to keep it. And therefore, what I'm going to suggest here, we cannot roll it to May 7. Okay, I believe that all of you should be with me on that. If you are not, let me know. We cannot roll it to May 7. But what I'm going to suggest is I'm going to suggest to close it so we collect some additional profits. If the stock was to fall, the most profits this option could provide anyways 5 cents more. So I'm just going to give up on 5 cents, close it now. And then if the stock was to rally back up, okay, then I'm going to sell it again and re-add that 56 call for the same premium I sold it originally. Okay, if now that would imply the stock rallies hard to the upside, which may happen. Okay, and if it happens, I'll be ready to sell again the same unit and be back into my original position plus an extra bonus with more premium collected. Okay, this is what I'm going to suggest to do as the next action. So let me explain that again and document it visually. So first, we sold the 56 call here that paid us 31 cents when we did. this call is currently trading at 5, so we're gonna close it and collect the difference. Okay, so we're gonna lock in another 20 something cents of profit. That will reduce the risk of the trade by that amount, etc., etc. Okay, and then I'm gonna turn around and place an order to trade the same call, the 30 April expiration 56 call, again at 31 cents. Okay. Now, how high the market needs to go for that call to be back to 31 cents? Well, it needs to go, another, 3, 4, 5% up, which may or may not happen. Okay. But again, it doesn't make sense to keep that call just to make another 5 cents. Okay. So I'm just going to expose myself to, let's call it an arbitrage opportunity, which may or may not happen. But if it happens, I'll take it. Okay. How would that look like on the risk graph? Okay. Well, if I go to the risk graph, not sure why I got this error on my screen. If I was to emulate this on my screen, okay, so let me do this. I'm gonna uncheck it. I'm going to duplicate. Okay. Analyze. Duplicate the trade. Yes. Okay. So I have the same one here below. Everything is absolutely the same. Okay. But now what I'm going to do is I'm going to go ahead and say that this one is going to be 0. Okay. So we have no 56 call. Okay. Now, let me close it on Thinkorswim. Okay. So I'm just going to close the 56 call. And let's see how much we get paid. So it says 5 cents there. You know what, just to get it executed, so for educational purposes, we can use it. We go for 5 cents, okay? But just to get it done, so we don't need to wait, I'm going to go for 7 cents. Okay, so let's see if that executes quickly. Okay, so that's it. Well, actually, we got filled at 5. Okay, well, thank you very much. Actually, no, we did not get filled at 5. We got filled at 7, I believe. Yeah, we got filled at 5. Yeah, correct. The order was at 7, but we got filled at 5. Great. So we are filled at 5. Okay. So in other words, when we did this trade, we sold it. We collected 31 cents. Now we bought it back at 5 cents. So we made 26 cents or dollars per contract in this trade. The price that we were experiencing on this trade was $1. So what happens now? Now our $1 trade has been diminished by 26 cents. So we are now dealing with a 74 cents trade. Okay, so I'm going to update the values here. Okay, and now that I have updated the values here, what I want to do is I want to go into the risk profile for you to see the difference. Okay, so what's happening to the risk profile now? Okay, well, basically I am in the same place where I was. Okay, now I have locked in those additional $26. So my real-time P&L now, instead of 100, is 132, which is whatever it was before, around 100 plus 26. So it's 132 right now as I freeze the screen. Okay, and if the stock goes up now, I can make unlimited money. Okay, why? Because I don't have the short call above any longer. If the stock drops, I am in the same position I was before, just that I would lose $66. That's my maximum level of pain in case I'm wrong. Okay, so that's where we're at with this trade. Okay, now again, this is the risk profile that we have, and you could just keep it like that. It's okay, but I'm not gonna keep it like that. My intention will be to roll the put so we can get more premium, and if the stock goes back up, okay, whenever it's possible, sell a new 56 call for the same amount, 31, that we had before. So we are back to some sort of a risk profile of that sort. So if the stock goes back up, but instead of going to the moon, which would be great to see, but it's not likely, the stock was to go back up, we get 31 cents and then go back down because they are red UFOs, right? So then this portion of the risk profile will look very much better because, again, just think about it. It would be like instead of 74, okay, just think about this for a minute, how it would be if I get another 31 cents. Okay, so the cost of the trade will be 43. So what happens if I reactivate my negative short and this costs me 43 total? Okay, well, take a look at the risk profile now. Okay, take a look at the risk profile. The most I can lose is 38. Okay, and now we are talking about levels which are much better, and it has to go like all the way almost 70 for us to lose money. So again, it's a very good advantage. Okay, while everything stays positive vega, again ready to enjoy the increase of premium as earnings approach. Okay, so nice volatility play, nice earnings play. We are just trying to position ourselves as smart as possible, and when the market moves, try to take advantage of that. Okay, so in other words, I'm going to move this here. So we are in this position right now. Okay, you guys let me know if this is understood, because it's a lot. And the next thing I'm going to do is I'm going to order field, create duplicate order. Actually, not duplicate, opposite. So I'm going to sell another 56 call for 31 cents, limit order, and it's going to be good till cancel. Okay, so I'm just going to put that order in. Okay, this is an order to sell the new 56 call, same expiration date, April 30th. Okay, and this is what we're going to do. Okay, we're going to do it all the way until then. Actually, to be honest, good till cancel is fine. Okay, but just to be like very, very proper. Well, it's not allowing me. Okay, interesting. So forget about it. I was going to say something, but I won't. So confirm and send. I'm going to send it. Okay, and we have now the order in the system there. So under ConocoPhillips, we got 3 legs. We don't have 4 anymore. Now we have 2. We have 3. Okay, but we have the willingness to acquire leg number 4 if that 56 call ever trades at 31 cents again. Okay, that's where we're at, and that's the plan. So mark waiting to get filled at 5 cents. Very good. Everybody very, very quiet on the YouTube channel. You guys say hi, my friends. No, don't be shy. I know it's a public space. Sometimes you may feel shy to type. Remember, you can always change your name as well if that's your case. Okay. And anyway, before we move on from COP, let's try to understand the calendar. But also, Ahmed, I need your help. I need to confirm that you got the 56 call. And I need to confirm as well how much premium you got for that. You paid for that when you did the trade. Or actually, yeah, what I have here is probably wrong. You are probably using the 53, I would say. But again, I don't remember. So you let me know what's your trade, please. And I will try to guide you. I need to know your expiration date, your strikes, and how much you paid for it. That's what I need to know so I can simulate and at least give you some instruction. Okay, so I'll wait for that. Okay, Ahmed, I'll take a sip of water in the meantime, if you don't mind. And we're gonna move now into looking at non-directional opportunities, which are gonna be fresh trades to be analyzed. Okay, notice my scanner is looking at expensive options today because initially I want to start the day selling options. Since we have COP, which is a positive vega trade, I want to enter negative vega. Okay, so you paid 77, you're using 53, and are you using May 7 and April 30 or May 7 and April 23? Where are you at? So 77, that's what you paid. Okay, so I'll wait for that. May 23, very good. Okay. May 23, very good. So basically you are in a minus $30 scenario. That should be your P&L. Please confirm that when you have a moment, Ahmed. So you are in that negative P&L scenario. Good news is that your 53 call that expires in April 23, it's probably showing distorted Greeks. Okay, I will be very positive if that's the case. So let's take a look. 53 call has 4 cents of extrinsic value and a theta of 4, which makes no sense because 4 times 2 is 8, but you only got 4. So that's distorted Greeks, and therefore the one thing you want to do here, minus 40 in your case, okay? What you want to do here is to roll it, okay, to the 53 option that expires in April 30, because that will add 21 cents to your trade, okay? So you're going to have to pay, I said 4, right? So you're going to have to pay 4, and in exchange to paying 4, you would collect 21. Okay, so 21 minus 4, that's 17 cents less that this trade would cost you. So 17 cents less, so 77 minus 17, that would be 60. Okay, and the resulting trade for you would be April 30, and the net cost would be 60. Okay, so that would be one action that you could take that would make sense. At the same time, I'm not in love. Why? Because you are above the blue line, so your theta is actually negative, okay, and you are at a disadvantage in this case, having done the trade the way it's been done, which is why we went through the long explanation the other week, okay, to try to avoid that, okay. Now, it doesn't mean it's necessarily wrong. Earnings are on May 7. Again, going back to the chart with COP, okay, we have seen that implied volatility started rising a little bit, okay. So if volatility continues rising, okay, if volatility continues rising, like it should happen before earnings, okay. So from before and after, how much is that? So that was 55, and here is like 43, is like 10%. Here is the next one. So here is 70, and before it's kind of 48, that's 20%. Here is the next earnings, and here volatility went down actually. So one went down, two went up, one was 10, one was 20. So let's pick the worst, 10. So if volatility went up 10 and it's already gone up 3%, so that's another 7%. So if you add 7% here, what's going to happen? So you would still be underwater, okay? In this case, by minus 20. So, yeah, my suggestion, would be that you consider closing the trade. I mean, the most you can lose is $60 if you roll it. So for practice purposes, if you only have one contract, I would say you could keep it. If you are using multiple contracts, probably it's a better choice to close it, because this trade is at a very, very, very much at a disadvantage at this point. And, could it come back to the midpoint? Yes, of course, anything could happen, but you are a bit at a disadvantage at this moment in time, okay? So it would be good, that you take a decision about that. That needs to be your decision, okay? Cool. Anyway, so going back to what I was going to do. So we are going to go back to our 55-minute time frame and try to look for some new opportunities, okay? I believe that this is also, since we are changing topic here, just to keep it clean, probably this is the right time to disconnect from our public streams. So my friends, hopefully it was good today and you learned a lot. Join me tomorrow and we'll continue with more. But we are now changing topic, and therefore I will be disconnecting from public streams such as YouTube, Facebook. You guys have a good one. Thank you for joining me, guys. See you tomorrow. Hopefully you can join me tomorrow. For the ones of you that continue with me in the private room, so you don't need to do anything, of course. The stream just continues, okay? So we're gonna go ahead and begin